Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and we're going to be doing an update on the market cycle ROI as measured from market cycle bottom. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. Make sure to hit that thumbs up button for the algorithm. Now, one of the things we've discussed extensively before is our market cycle ROI. And what that is if we took the closing prices every single day, what is the lowest price that we had each market cycle? And then we just normalized that and said from that price, from the closing price on the lowest price day of that cycle, what was the market cycle ROI? And for this video, we actually, for this chart, we actually extend it to the peak, and then we actually extend it all the way down through the bear market, so you can see how the bear markets relate to each other as well, and you can quickly see what was the market cycle ROI from the bottom to the end of the bear market, which then began the next cycle. Okay, so that's the point. So this was normalized. The second cycle was normalized to the price at the lowest point at the very end of the first cycle. So this is the best way, I think, to think about it in terms of thinking of the market cycle ROI as measured from each market cycle bottom. Of course, some people would prefer to measure it from the halving, and we actually have videos on that too, and we'll do an updated video on that here in a few days probably. But in this video, we're just simply looking as measured from the bottom. So what are some things we can note from the first cycle to the second? Well, one of the hard parts about the first cycle is the data corresponding to the first cycle. It's hard to get super accurate data early on. And for instance, just taking, say, a slightly lower price on some of those wicks that we had really early on would have changed the ROI completely. And so we have to work with what we got, though. I'm fair to the data. I just take the closing price from each cycle at the lowest point. And it gives you this one, this peak here. So this is 100x. So this is 200, 300, 400, 500, 600x, give or take, right? Give or take a few x. What's a few multiples among friends? So if you look at the second cycle, what we notice is that actually early on, it was ahead of cycle one, in fact. It was ahead of cycle one. It was keeping pace with it for a little while, for a month or two. And then ultimately it came down and was not able to keep pace with it. And this cycle was actually somewhat interesting because it was a double peak cycle. Rather than just having a major blow off top, a single one, we actually had two major blow off tops. But ultimately, we did enter into an extended bear market again. And you can note that the time it took to reach the peak was longer in cycle two. Okay, it was longer in cycle two than it was in cycle one. This one was about a 500x. Rather than a 600x, it was around a 500x as measured from market cycle bottom. If you look at cycle three, you can see that early on, it was keeping pace with cycle two and was even ahead of cycle one. But ultimately, it could not keep pace with it, and we peaked several hundred days after cycle two peaked, which peaked several hundred days after cycle one peaked. And then we ultimately went into a bear market. Now, one thing I should say with this, or in general with, say, lengthening cycle theory, is a lot of people really don't like it, right? A lot of people, let's just talk about the elephant in the room. A lot of people really don't like it for a number of reasons. One is the idea that they want their money and they want it now. And they don't want to have to wait 2 more years to theoretically see the market cycle top. And we'll say here now that you might not have to, right? There's always a chance that the data changes in the current cycle, and then we have new data to go on, new theories to build. However, all I'm doing is looking at the data, right? That's all I'm doing. Obviously, if we wanted to talk more about fundamental reasons, we could. But when we look at the data shows that the cycles are lengthening. Again, I understand that a lot of people don't like this. If the data suggested something else, I would present that. I would honestly prefer to see non-diminishing returns and non-lengthening cycles. I mean, who wouldn't want to see a $300,000 Bitcoin in 11 months? I think most people would say, sign me up for that journey. We just want to be a little bit more practical on this channel and say, if it reaches $300,000 in 11 months, then great. And if it did, then our current cycle would ultimately look very similar to the last one. So we're not saying that it can't happen. We're just going based off the prior data to see, is it likely to happen? So the first thing we want to say with this current cycle is in a similar way as cycle 2 and 3, early on it was ahead of cycle 1, but it ultimately did not keep pace with it in terms of its market cycle ROI. In 2019, it was ahead of cycle 2, but ultimately it did not keep pace with it. And we talked about this over here. Back in 2019, we talked about this and said, we're ahead of it, but we're probably going to not keep pace with it. And in fact, we didn't. We did not keep pace with it. We did not even we're not even close to keeping pace with the second cycle. And in fact, if we had kept pace with the second cycle, right around the time that we were having the bottom in March of 2020, that would have also corresponded to a couple months later a 100x from cycle 2. So ultimately, cycle 2 was able to stay ahead of cycle 1, just like cycle 1 was able to stay ahead of cycle 2. Now, in the same manner that we were a year and a half ago when we were discussing, are we going to be able to keep pace with cycle 2? Now the question is, are we going to be able to keep pace with cycle 3? And again, we don't want to claim that it can't keep pace with it. Of course, it could keep pace, but the idea that just because it's ahead of schedule now means that it has to stay that way. Well, we can look back at cycle 2 and say we were not able to keep pace with it. So why do we why do we need to operate in a deterministic manner and say that, okay, we're ahead of it now, therefore we have to stay ahead of it for the next 11 months? Because if you went along with that line of thinking, you could have applied the same rationale to cycle 2 or the same rationale to cycle 1. And we were not able to keep pace with it. Again, I'm very bullish on Bitcoin. I just want people to be a little bit grounded in the 300K by the end of the year predictions. If it happens, great, but we'll see. We'll see if we can keep pace with it. Currently, even though the price has come back down recently to lower than 10x because our market cycle bottom was 38 or 3100, and we've gone below 10x some, and we're back above it occasionally. You have to consider that this might not be able to keep pace. Okay, it simply might not be able to keep pace. Now, if it does, great. From a fundamental reason, a lot of the and we don't talk about fundamental stuff a lot on this channel, but a lot of the reasons that are thrown around why this cycle is keeping pace, of course, there's a number of reasons we can talk about. The first reason being institutional money. And I've said all along, going back 1 or 2 years, that institutional money will be needed to get Bitcoin to $100,000. We simply need that level of volume to get us there. It's a lot harder. It takes a lot more volume in the space to move market caps continuously orders of magnitude. That's why it's so much easier for altcoins to do a 10x, because their market caps are a lot lower than Bitcoin. It's a lot easier to take a coin with a market capitalization of a billion to 10 billion than it is to take one from, say, 100 billion to a trillion, or a trillion to 10 trillion. It takes a lot more volume to do that. And so we always needed institutional money this cycle to get to $100,000. Now, with institutional money, yes, there's more and more institutional money being onboarded, but at the same time, there's still a majority of the institutional money that could theoretically come into the space has not come into the space yet. And one fundamental reason, because I know some people want to hear me talk more about fundamentals, one fundamental reason why I think this cycle could be longer than the last one is because fundamentally it takes institutions a long period of time to go from thinking about investing in Bitcoin to then deciding they want to invest in Bitcoin to then actually being able to invest in Bitcoin. That's actually a fairly long process. It's not like your average retail investor that can just transfer a couple $1,000s to an exchange and purchase Bitcoin. There's a lot of steps they have to go through, a lot of boxes they have to check. It's not like they can just decide one week, hey, we want to purchase Bitcoin, and then the next day do it, okay? So with that in mind, if the narrative that is that we see playing out, the institutional money is the narrative of this market cycle, then what happens at the end of 2021? Is the idea at the end of 2021 that all of a sudden institutions are going to stop buying Bitcoin because this was our peak 4 years before? What goes on then? How is that an attractive investment for institutions if they're all FOMOing in now with the idea that everyone's going to be selling in December, right? This to me, this doesn't make a whole lot of sense, especially when one of the main narratives is that institutions just want to put it on their books and hold it through 80 to 90% drops. First of all, I think that the extent of drops as we continue on will become less. I don't think they will always be these 80 to 90% drops. And one of the reasons I think that is because I also don't think that we'll reach market cycle ROIs of 500 to 600x again, and probably not 100x as measured from each market cycle bottom. Therefore, the blow off peak will be less spectacular, but in the same manner, the bear market will probably be not quite as bad as we continue on and we have more and more institutional money pouring in. So I would agree that this market cycle is made up of a lot of institutional money coming in. I just am more bullish than, say, the typical 4-year cycle that says it'll peak in December. If we were to fast forward 11 months from now and we're in December, are we going to be looking at it and saying, okay, institutions, they're going to stop buying right now, therefore the price has to go back down? Okay, is that really how it's going to look this cycle? Or the other idea is, well, if institutions don't stop buying in December and they keep buying into 2022, which I'm sure is what a lot of people would want, right? If they continue doing that and then the price goes down, then was it institutions driving up the price in the first place? Or was it institutions plus retail FOMOing in because they liked the confidence that institutions coming in provided to them? Because the idea, right, is, well, if institutions are coming into the marketplace and they're buying Bitcoin, then there must be something to this. Therefore, I'm going to buy Bitcoin because institutional money is probably smarter than retail money, which is simply always not true. I mean, it is a lot of times true, but there are times where retail money makes a better decision. If you look at a typical bubble chart, a textbook bubble, it's the smart investors that come in, then the institutional investors. So a lot of people that have been watching this channel, of course, would be considered the smart money because a lot of them came in before the institutional investors came in. But again, institutions have been buying Bitcoin for years. It's not like it just started in 2021 or 2020. They've been around longer than that. I think a lot of it is institutional money is coming in, but also a lot more people are becoming aware of it, and a lot of these institutions are publishing that they're doing it, and it's becoming more obvious, right? A lot of times when you see the institutional money coming in, they don't tell you, I mean, with the exception of some, they don't tell you necessarily when they're buying it, but they'll tell you 3 months later that, hey, we bought Bitcoin back when it's 10K. There were several institutions that did that, but they waited a few months before letting people know that happened. So I agree this cycle is the cycle of institutional money. I simply think that in the same manner that we're moving up and then we're coming back down, we're coming up, maybe we're calming down a bit, maybe we continue on higher, but I would like to see this cycle extend further out than 2021. Now I know some of you are more bearish than me and would like to see a bear market in 2022, but I would consider this cycle to be the cycle of institutional money, and because of it being the cycle of institutional money, it will take us longer from a fundamental reason, not just from a reason by just looking at the charts. Let me know what you guys think about that thought. I understand that a lot of people disagree with this line of thinking, and that's okay. But I do think it's good to look at different models and look to see, well, from a data perspective, we can see that the cycles have lengthened. And it's funny because some people will post things saying, cycles don't lengthen because of this, but it's like, well, do you just ignore the lengthening part here? Do you ignore the lengthening part here and just say, while we're in the middle of this cycle, that because we're temporarily ahead of the last cycle, that cycles don't lengthen? Again, I think it's too early to call, but we'll ultimately see what happens. I'll be rooting for Bitcoin in 2022 when I assume that a lot of people will actually be rooting against it at that point. We'll see what happens. from another reason, fundamentally perhaps, is from the dollar perspective. We've looked at DXY, the US dollar currency index, and in 2017 it dropped 15%, and that came with Bitcoin going up a lot that cycle or that year. It started the year around 11 or around $1,000, and it ended the year around 20,000, or at least at the peak on December 17th. In the same manner, since March, the dollar has dropped 13%. And it started to put up a stand right at the same spot that it put up a fight in early 2018. So I think the depreciation of the dollar, which could be catalyzed by the increasing money supply, has also helped propel this move. So the dollar going down, which is also typically good for stocks, has helped Bitcoin to do well. We know that the dollar going down is good for Bitcoin, historically speaking. And also couple that with the idea that institutions are FOMOing in. I think it's led to an amazing run so far. And it doesn't mean that this run cannot continue in the short term. But this is ultimately, for more fundamental reasons, why I think that, I think where we are currently. But it's also from a fundamental reason, not just from a data reason, that I think this one will extend longer. Institutions will be pouring in for years. Is the idea that institutions just pour in 2020 and the first half of 2021, cash out the end of 2021, and then FOMO back in at the next halving, and we rinse and repeat that for the next 100 years? I don't think that the market's going to work that way. But again, I would love to be proven wrong. I would love to just love the idea of the idea that we can just repeat this 100x move every 4 years from here until infinity. Who would not want that? But let's be a little bit more pragmatic and say markets are efficient. They're going to evolve. A lot of this could have been people front running what they thought was going to happen anyways, and what a lot of us think is going to happen. But I do think that it will take a lot of momentum to continue pushing us up this curve. And I think that in a few months, we'll come back here by, say, December. I don't know where it'll be. We could be further along than we are right now, for sure. We also might not be. We could easily be further along than we are right now. But unless we put in a $310,000 Bitcoin by December, then we're looking at diminishing returns as measured from market cycle bottom. I get it. If we measure it from the halving, it'll give you different results. Not that much different. I still think it's going to predict like a $250,000 Bitcoin. I'll have to go see exactly what it is. Maybe somewhere between 200 to 300,000. And again, it's possible. But as measured from the cycle bottom, to get to 100x, which is what a lot of people want, that $300,000 Bitcoin, it has to keep pace with the last cycle. But the data shows that so far the cycles have not been able to keep pace with the prior cycles. So this is the idea that a lot of people are hoping for, right? And the idea generally being that, okay, well, we're going to have corrections along the way, and people can get bearish, but then we can just continue on, and ultimately we'll go to 300K in 11 months. But I'm here to say, what if it looks something more like that? What if we come down a bit and then we continue on? Again, I'm very bullish on Bitcoin. I just think that there's a higher probability that this continues than we continue following the last cycle. Again, I would love to be proven wrong on that. Or maybe something like this. Maybe this cycle is met by a four-peak cycle, a 2019, 2021, maybe 2022. I mean, this was about 18 months apart. So summer of 2019 to January 2021, 18 months. If the next one is, say, another 18 months from now, that'll be summer of 2022. So maybe we get one somewhere out here. I don't know exactly. And then maybe we have another one later on. So I generally think that there's a lot of reasons this will continue. But again, we'll see what happens as the market cycle continues to play out. Let me know what you guys think. What do you agree with this analysis? What do you think about the fundamental reasons? If you are a proponent of the idea that it will peak at the end of 2021, how does that fit into the narrative necessarily of institutional money coming in? Do you think that once institutional money is coming in, that every institutional money will stop at the end of December in 2021? And if that's the case, and if they don't stop, if the idea is that institutions are onboarding, if they don't stop, then, and if the price does go down, then were the institutions the reason for the price appreciation in the first place? I agree that institutions are helping to drive the price up, but I don't feel like you can have it both ways. You can't you can't say that institutions are the reason that price is going up, and then if they continue buying into 2022 and the price is going down per a lot of people's reasoning that we'll have a bear market in 2022, it can't be both ways, right? It can't be institutions are coming in now, therefore the price is going up, and then later institutions are coming in, but then the price is dropping 80%, like a lot of people might expect it to happen if it's following that typical 4-year cycle path, which, by the way, the last cycle was the only 4-year cycle we've had. Unless you just don't consider the blue curve and the orange curve to be separate cycles and instead consider them to be the same cycle. If you did consider them to be the same cycle, then the market cycle ROI at the peak would actually be around 10 to the 4. And then for the cycle 1, and then cycle 2, it would have so far, or what is cycle 3 would then be cycle 2, its peak would have been at 10 to the 2. So that's just something to consider. We'll ultimately see how it plays out. I've also seen people combine this cycle, and then this one with this one as well. And maybe we'll look at that in future videos. But let me know what you guys think. If you guys like the content, make sure you subscribe. Give the video a thumbs up. Also, check out the Telegram channel in the description below. And as a reminder, we do have the premium list at intothecryptoverse.com. You get access to weekly reports, weekly videos, a Telegram alerts channel, a risk dashboard, a Telegram chat room, premium-only live streams, a whole lot of stuff. We also have a lifetime membership deal going on for 3 more days before the prices go up on that. If you want access to the lifetime membership, you can find a link to that in the description below. Otherwise, just check out intothecryptoverse.com. I'm really curious to hear what people's thoughts are. Will we keep pace? Or will it slow back down and lag the last cycle? Let me know what you guys think in the comments. Give the video a thumbs up, subscribe, and I'll see you next time. Bye.